Look at the difference of interest, 230,000 versus 930,000. That means for you to buy the same home, you have to pay $700,000 more, $750,000 more to buy the same home. Welcome to the Canadian edition of Home Prices. We're going to be digging in a little bit into the main problem that I see that is facing people today is you don't qualify for a mortgage anymore. This is the main problem that I am seeing right now. Now, everybody wants to talk about all different kinds of subjects, but I believe that the majority of it is like sprinkles on a cupcake because it doesn't actually work unless we have money. Money is not endless. We need to have mortgages. We need to have liquidity. And so a lot of people are saying, well, there's still a shortages to homes. Sure, I agree with you. Well, we have a lot of immigration coming in. Sure, but the majority of the immigrants that are coming lately have not been ones that have education, jobs, money, and so on and so forth. So just pumping up the population is not what's going to build a lot of homes. The leading indicator here is how much money you can borrow. The average price of a home in Toronto was 1.6 million last year. Now we're sitting around 1.2 million. Most people, by far the majority, do not have that much money to buy a home in cash. And so we are reliant on the money coming from the bank. And this will all come down to interest rates, what the central banks of Canada is going to do, the central bank of the United States, what interest rates are going to be. We have to look into that. So remember, a lot of money is borrowed from the central bank government. So the Bank of Canada will lend money to the commercial banks, BMO, Scotia, TD Bank, whatever, and they'll lend it to them for their 4.5%, and then they up it. So they got their base rate, but now we have to figure out how much commission they want to charge. And right, that changes. Sometimes they're being very greedy because everyone wants it. And so they're going to charge a higher commission. They add 1 or 2% on top of that, 4.5%. But as time goes on, we're seeing the interest rates have come down a little bit lately. You got probably seen that in the news, but that interest rate didn't go down from the central bank. It's just the local banks, the commercial bank, BMO, RBC, that stuff. They reduced the amount of commission that they're going to make. That's why the rates went down, not because the government did it. So remember, there's a lot of things involved in this. And so there's multiple parties when we're dealing with it. Now, I have some really fun stuff to show you today. Let's take a look at my first here. Now, the Great Recession, the economic downturn, we all remember 2007, 8, 9. This was a really, really tough time. Now, why was it so tough? You guys probably remember ninja loans, no income, no job. And so we fixed that. That's not happening anymore. It was very, very bad. Everybody was making bad loans in the United States. They called it subprime. You probably remember that. And remember, it caused a global meltdown because of that. And also remember, it was only 4.5% of properties went into foreclosure. And look at the trouble it made. 4.5%. Remember that number. So the Great Recession, you guys, right here in 2007 to 9, look at how far the average home price fell in the United States. 28%. The average home price across the country fell 28%. That's what caused all the problems you saw. But some cities, if we were looking at Las Vegas, for example, it dropped 61%. Woo! This is another key for us to pay attention to is not all real estate is the same. Some properties were twice as bad as other properties as far as a percentage basis, right? So the whole national number always looks better than individual numbers. And we're going to be getting into that as well. So if we go to the Canadian Real Estate Association, they're saying home sales are at a 14-year low. Now, this is going to cause a lot of problems in the economy, especially in an economy like Canada. 18% of all business related in Canada comes from the real estate sector. Think of all of the businesses that are connected to it. When I make a certain amount of income in the business, that money doesn't sit with me. I redistribute it. I have to have photographers, videographers, digital marketers, all kinds of systems that we have. We have advertising that we have on Facebook, Instagram, YouTube. We have assistants that are helping us. The line is endless, but all the money I make is income for somebody else. When you wipe out that entire sector, the entire economy will go down. And so this is big, big numbers. When you see 50% less transactions, it means 50% less in the economy. That might translate to a 9% of the GDP dropping, which would instantly put us into a recession. That's why I tell you that a recession is not coming, my friends. We are already way into one. All right, let's take a look. 14-year low in sales, big problem. Home sales are down. Monthly activity is 37.1% below January 22. Woo, that's crazy. But I think this is the number that everybody would like to know, that property prices are down 12.6%. 12.6%. My goodness. That is national, guys. National. All right, so let's move into this next chart that I want to share with you. It's also on Korea. It's called the HPI Home Price Index. This is all the cities. You can see that all the numbers are not all the same. We see this was lagging Windsor. We see one up here, Regina, was outperforming. They're all different. Okay, so let's try to take that away and let's look at just Alberta, for example. We want to look at patterns. This is going back all the way to 2005, but we can see when there was a massive energy crunch last time that there was a massive boom in prices in Alberta overall, specifically in the north. But then, as you see, it kind of petered out for a while. And if we look at the difference between the 2020 and now when we had that lockdowns, we see here the rise wasn't as great. Now, let's take that away. Please remember that pattern, and let's change that pattern to be something like in the Greater Toronto area, for example. You're going to notice a massive difference in the look of it, because back in 2005-6, there wasn't that massive boom that you saw that was related to energy. But if we see 2017, completely different bump here. Do you guys remember what that 2017 bump was? Toronto was putting a tax on foreign buyers. So there was a rush into the market to buy any property they could before the deadline. This was created by the governments. So if we move forward and look at what happened in 2020, the absolute insane rise, bigger than most cities in Canada, as you just saw as one example, but also look at this drop. Very, very, very large drop. We have to keep on looking at different examples so that we have an idea of what we're looking at. Let's take a look at Victoria, another big center. Victoria did not have the same rise and it didn't have the same drop, smaller. So when we look at things like this, we have to be able to draw our conclusions. And the conclusion is simply this: it comes down to what you can qualify for on a mortgage. Remember this sentence: the larger they are, the harder they fall. The bigger the price, the more it will drop. So almost every agent is going to tell you some kind of wacky doodle story saying, well, I know 6 people who own their home in cash and it's not going to matter to them. Listen, if you're on a mortgage, it matters to you. If you own a home in Toronto, it's worth 1.6 million. You've done your whole career, you're retired, you're banking on that money to retire. I have never met one person in my career that doesn't care about losing $500,000. I've never met one. If you've met one, I'd like to know, honestly. So this is what you can play around with this and the different cities to see how it's going to affect different places. Now, let's check out Vancouver. Vancouver is another major hub. Again, massive spike here, big drop. But interestingly, right, 2016 to 18, I don't remember why there was this big spike here in 2015. If you guys remember that, it's good to know. But this is what I mean is not all markets are the same. They're very, very different. So where is Canada today? Canada is down 12% for the year. But overall, Toronto is down much, much more than that. Let's take a look at Toronto as a whole. Notice what it says right here, Toronto, Ontario. Now, this is including, you guys, condos, it's including townhomes, semi-detached, everything, 100% everything, 23% down. 23% down, which is a massive number, you guys, 23%. Now, that 23% is everywhere from Barrie all the way out to the western side, out into Hamilton, all the way to Oshawa. We're talking 100,000 homes that sold in the past year. That is every home from every brokerage, from every city, from every realtor. And so this is huge numbers. Now, break it down. You guys always know what I'm saying. Well, how did you come to that number? Let's dig into that a little bit. Now, detached homes, as you can see here, 45,000 properties sold. 45,000 properties sold that were detached properties. So let's take a look at them. That's obviously the majority of them. Detached properties down 27%. Bam, 27. Ouch. All right, so let's take away the detached properties and let's just look up condos, for example. Now, again, we're not being specific. We're just saying condos, not 1 bedroom or 2 bedroom, just condos. Only down 15%. So now you have to get into that a little bit more, you guys. What did we just learn? The condos are down way, way less, only 15%. Homes are down 27%. Why is it less? If we head downtown where you have good transit, properties are only down 6 to 10% if you're in a condo. So why is that, you guys? Now we have to think about this. The larger the price, the more it will fall. Number one, that is the rule. Typically, detached properties are a lot more money. So those are the ones that will fall the most. Secondly, why are condos across the GTA down more than the condos downtown? Because if you live in a condo and you're in a suburb, doesn't matter what city, you pick it, Canada, US, doesn't matter. If you're in the suburb, you still need a car, and a car payment with insurance and gas and oil changes, it's $1,000 a month, no matter how you slice it. So if you live downtown and you live in a great area within 200 meters of a subway station, now all of a sudden I can get rid of my second largest expense in life, no car. Now I can subway everywhere for like a $3 token to get on the subway. Now you're talking. I mean, it sounds cliche, right? Location, location, location. That's the most important thing for you to do. Location, okay? This is what's going to preserve your capital. And I mean, we're seeing this story play out right in front of us. Now, let's also go into what I think is the biggest problem, our loans. So let's take, for example, $1 million property. Let's also remember, though, in Toronto right now, the average condo is 670,000, up from 800. But do you guys remember when we were looking at all condos and all homes as a blend? We're talking about $1 million is the average right now. The average was 1.3 million on a blend last year. Blending meaning detached homes and condos. So if we head into a loan calculator right here, $1 million is what we're going to put in it, and $1 million over here. So we're going to make it the identical thing. Last year, we were locking in our rates at 1.75. Today, 6%. Both 25-year for Canada. Now, it really, really depends. Some people can get 30s, but the majority are on 25s. But look at our monthly payment now, $4,000 versus $6,500. Also, look at the difference of interest you would pay over your time, $230,000 versus $930,000. That means for you to buy the same home, you now have to pay $700,000 more. $750,000 more to buy the same home. Let that sink in. $750,000 more for the exact same home. That is shocking, but the money doesn't come to you. And that is the main difference. So let's take a look at this again. Please remember this, $4,000 a month, $6,500 a month. So we're going to require to do a little bit of work when we're going to look at this. Let me pull up a calculator and let's do this together, okay? We're going to take a calculator and run some very, very basic math. If you need $4,000 a month to pay for your very, very first payment, $4,000, okay? Now we're going to take that and we're going to multiply that by 3. That's what the banks want. You can have a payment that's 1/3 of your monthly gross. So it means you have to make $12,000 per month. Per year, you're going to have $144,000 a year is what you would be required to make. $144,000 a year. So this is what it was last year for you to buy a $1 million home. This is the salary that you needed. Obviously, if you didn't have massive other debts or other problems or whatever, okay? So that's what you need. 144, please remember that. All right, now let's take that away and let's do it again. You need it on the second payment. Now this year, it's much different story, $6,500 times 3 again. Remember, you're allowed 1/3 of your income, $19,500 a month. Per year, what does that work out to be? Times 12 months, you now have to make $234,000. Do you remember the last number was $144,000? You now need to make $90,000 more just to afford the same property. How much would it take you at your job to get a $90,000 pay raise? It's not happening. Nobody is getting a $90,000 pay raise. That is a very, very, very good job. And it's in addition to what you're probably working and your wife is probably working. So this is what happens is home prices have to come down to match what people can afford. So if you just look at the median salary of your town, regardless of where you are, the median salary of your town, what is 1/3 of that? And that is how much their mortgage payments are allowed to be. We can figure out where home prices will end up dropping to. On average, for every 1% that interest rates go up, home prices drop 10%. So you have to pay attention to this. You see from the numbers in Toronto, they're down quite a bit. So we have to look at some things that are hopes and dreams. And I know that people keep saying it. I see them on TikTok and Instagram and YouTube saying, well, immigration is high. Well, what kind of immigration? Because if we had very young people that had maybe a degree and a lot of money coming in and buying up properties, they're going to flood the market, right? But what happens if there was a humanitarian crisis at a place and there was hundreds of thousands, half a million people that come into Canada that don't have any jobs or any money? It's not the same. Now the government has to buy homes and it's completely different. The GDP and the economy is not the same. So remember, I always encourage you to dig a little bit more into the numbers, but it doesn't really matter that the numbers are usually your mortgage payment times three, one third of your payment per month, and times 12 months. And so we have a good idea of where it will land. And now this is happening for ages. This is the math that they've used for decades. So this is what I encourage you to do, is to dig into that. Now we're expecting property prices in Toronto and Vancouver to drop even more. But remember, the bigger they are, the harder they fall. So if you're in a very, very small market, and let's say it's a city that is under a million people, even under 500,000 people, then you will not see very much. Property prices might only come down 5% more or something like that. Some not at all. We have properties that are actually up even through this. I just talked to one of our clients this morning that bought a property and they just bought it last year and it's up 5%. So if you're buying in areas that have huge inflows of people with money, you're going to do really, really well. Anyway, you guys, I think this is very, very important for people. I think there's a lot of disillusion that is out there. If we're looking at realtors, last spring, best time to buy, last summer, best time to buy, last fall, best time to buy. They're always saying it's the best time to buy because they're interested in commissions. But if you go and follow me at all, I've been telling you, sell your house all along. Guys, I want you to make money. I want more people to do well. I do this because I want to be a change in the world and I want to help people, because the next 2 years is going to dictate the next two decades of your life. Anyway, you guys, this is going to be one of the best opportunities for you to create wealth in your lifetime. If you're thinking of selling a property, you can always follow me and go to sellhigher.ca. This is where we sell properties for more money, less hassle, and we do it quicker than everyone else. You can go there and check it out. Anyway, if anything I could do to help you, please reach out to me. I try to read all the comments and answer any of them that have any good, real questions. Please leave questions. I want to help you. I wish you the very, very best. If this helps you, please consider subscribing. If you think a friend might benefit of this at all, please think about sending it off their way. We would really appreciate it. Thank you very much for supporting the channel, and we'll see you soon.